back. And we are on the laptop, as we spoke about yesterday. No camera, no webcam for today, probably for the rest of the week. I'm going to be potentially recording some content today. Well, not today, sorry. This week. And you'll be seeing me doing some stuff pertaining to Auntie Homes. And today we're also going to just primarily focus on the ICT mentorship. I'm going to have to leave my house in 2 hours. So I will most likely be here for an hour, maybe an hour and a half, depending if I decide to eat before I leave. I will kind of gauge within at 4:30 whether I'm going to continue or not. But the idea minimum is to finish off ICT Mentorship 2022, episode 10. We got about 20 minutes into it, about 18 minutes into it. So we want to ideally finish that, which will take us maybe about the hour. And then from there, we can then determine whether we want to continue to do more or not. Prior to that, I'm going to just quickly go over the website. I believe it's the first link in the description. Nevertheless, it's in the description. And it is something we've mentioned in every episode. And we're going to keep mentioning it for a very long time. I think we're going to amp up more than marketing next month. But it's called AtsiEdge.com. That's ATSI and then edge.com. So wait. Well, I'm going to have to do that off stream. Okay, so, well, it's a bit difficult to speak about. Anyway, it's IT Edge. I need to fix that. It's actually good I kind of saw that, but to fix it, I will need to be off stream. Can I have my screen? Okay, give me a second, people. I just have to input some sensitive information to fix this. There's always something, eh? It's part of the job. Okay, let me access my computer. Sorry about this. I didn't know it was going to be an issue. Because I'm automatically signed in on my own computer, so... Okay, 1 second, my mom's calling me. Yo. Hello, mom. Okay, sorry. Yo. Now it won't let me sign into my computer. Okay, there we go. Right. can you guys see this? You can. What am I doing? I need to fix the website. I'm going to open this. Wait, where would it be again? Oh no, it's going to open it in the browser. Dude. With that. Okay. Okay, I need to find okay. Paste. Okay, the SB key, which is there, which is over here. Can you copy across? So you can. Okay. Yes, you can. Where did I find it? Okay. So settings. API key, I think. Okay, nearly done. Okay. Okay, we're publishing it, the new account website. Can you see it's working now? Perfect. Right. Can make sure nothing leaks. There we go. Sorry about. There's always something at the start of the stream every time. Anyway, we finally fixed it. The website is working again. It's no longer saying the previous issue. Nevertheless, let's do this again. So if you go to atsedge.com and you here, this is the landing page, which gives you information about what you're logging, signing into, or signing up to. And you can go through that to see if it's for you outside of what I'm going to show you already. You have the sign-in feature over here. I don't think this works. Yeah, this doesn't work right yet. I need to fix that. So create an account with just the manual. Okay. Let me sign in. Okay, I'm gonna need to have my screen for this. Okay, signed in. Let me come back. So this is what the website looks like. I'm on my MacBook Pro, so this is the interface for on the Mac. This is the journal where obviously you have your trades, which is great. You have the status of whether it's closed or not. This is to do with you following your rules. You then have tags that you can obviously attach to your trades. You then have screenshots of the trades, and you can always go back. So whenever you're reviewing a trade, you can have a look at it. This is up to you because when you log a trade, you can actually add screenshots for free, and this are compressed when they are saved. So here you can drag images. I'll be honest, I don't use this Mac, so I don't like Mac either. So I don't really know how to. I don't think I even have any images to showcase, but this is where you do it. You can obviously have your rules over here, which you can edit and implement your own personal rules. And these checklists are going to be weighted in the future. Again, that's something that's going to be fixed. On the premium feature, you can scan a screenshot of your MetaTrader 4 or your TradingView entry, and then you can upload it to this part of your trade and it'll fill in the details for you. As you begin to enter these pieces of information to do with your trade, like the pair, the currency, the session, all of this stuff, do as much as you can, and it will fill out all of these to the best of its ability, which is the pips, the stop loss distance, the restored ratio, etc., etc. And of course, lot size, contract size, whether you made profit or loss, whether the trade is active or not active, and of course your rules, tags included, things like you can do things like emotion, maybe you're feeling overwhelmed that morning, or it could be an over trading day, maybe you took 5 trades. You can say, like, you can say, you can write a sentence and took 1 trade that morning already, and you can say re-entry to a previous trade. And that could be your new tag, and it creates a new tag for you. You can create it, you can add it and delete it there. You can add more than one as well, and of course you can save a trade. After you save a trade, you can then of course close it eventually in the future, and then you have an exit price over here, which will help you close the trade. And yeah, that is how you close or partially close. And the information of course is there. So I'm going to delete this because it has no invalid. I'm going to delete this as well and this because I don't add anything of value. You can create multiple accounts. So here you have main, alt, you can add a new strategy, whatever it may be. You have the calendar format, which is the same thing, but you can actually see this on the calendar view. Go to all strategies, there you go. And you can see all the calendar operates based on which account you've selected, your main, your alt, your funded account, your whatever account, and everything has changed. Even the journal changes based on the filter. Oopsie, journal, and you can see the filter here. When we're on our main, there's no trades. Wait, what's happening here? Wait, no, not mine. What? Let me refresh the page. I don't know what's happened to my laptop. My laptop's just not working. Okay. Today. Let's just close all of that. So that was a laptop issue. Pardon me. This laptop is overdue to be sold. Okay, let's try this again. Okay, I think we're back now. Okay. So you have all of these features. You have the calendar section, like we were talking about. You have analytics where you can see some stats about your trading. You have the AI agent which reviews your trade or logged trades and gives you feedback. You have your cloud storage where you can download your log trades and export them somewhere else. You have a get in contact section with me based on these types of conversations, and you have any issue concerning these matters, I can help you. Ideas, when you have an idea for a website, it could be like build an app, it could be change the color schemes, it could be option to, I don't know, maybe create like a profile or something, or add your image, whatever it may be, add it here, and I'll ideally like to work on that. And there's some examples here as well. Study journal, something I'm working on in the background. It's not a priority for me, so this will come out, I predict maybe in like 2 months, but it's going to be a cool section where you can back trade or back test and have annotations to maybe learn new strategies, and it will be in a slightly different format to the already, or the main page, which is the journal. The study journal will be slightly different. It's tailored around learning rather than actually keeping a track of the trades. So you'll be able to learn, and I got that inspiration from the fact that I have been learning the ICT 22 mentorship program here on Google Docs and Google Slides, and we'll pitch both on that I like it to be in one place basically, and I think it'll be a cool way to, as I'm annotating all these diagrams, to have
If
that
I can
done
show a
for you, so that
simplistic,
the structure is simpler to follow rather than create a new document starting from scratch. There's templates that you can utilize to your ability. So yeah, this is the website. Join up. It's free to use, and then you have the premium feature to get the extended benefits. So at Sears.com, first link in the description. So I think we're able to finally start. It's never a real stream unless there's something to overcome, eh? But I won't have access to chat because the chat is on this screen. You can't see my screen, but this is where my chat is. And why is my stream now dropping frames? Anyway, time is going, so we have 30 minutes. I want to try to get this done. So let's do that. So we ended up over here. I think we did go over this to my remembrance. Nevertheless, we recapped a little bit in the last episode. We did do it last episode, but we recapped what we learned. And we essentially understood the fundamental ideas of the power of three, which is here: accumulation, manipulation, distribution, and the purpose behind that.
That's more
remaining. That accumulation is where cells are accumulated, which is where smart money sells. Manipulation, that initial move to the upside, which we classify as a Judas swing, and that distribution down here to where the orders of price or the sales orders are distributed down here to the buyers down here, which is at a discount. So that is kind of the overview of what we expect price to be, and that is the bar format of the shape of price. And so the low we can never really always predict. This is obviously for sell. This low we can never really predict where it is, but we can have a good idea based off time. Okay, and at a certain time you will tend to see the closing of a price, closing of a session at the point of a certain time. And that close, this is a daily candle, that close will be near the low of the day. Right, and that low of the day normally occurs at a certain time. So that's how we kind of set our targets. And sometimes set our targets, but sometimes come out of the markets or kind of predict where the close of the day will be. Right. So there's stuff from before that, but for the sake of time, we're just going to continue moving forward. Control N. There we go. Right, I think we have one already. Okay, perfect. So
advanced. You don't even need that to be profitable. You just need to know, is this daily range more likely to expand higher or lower than the opening price? That's it. That's all you have to do. That's the key to bias. Now, how do you know what the bias is going to be most likely? Not everyday bias. Most likely, what's the bias going to be? Well, let's go back to this low here. It creates a swing low. That means a low with a higher low to the right of it and a higher low to the left of it. So it's three candles that make up a swing low. You do not need a Williams fractal. That's way too many candles. You can miss the move. Okay, you don't need that. No disrespect to the gentleman, but that's nonsense. You don't need that. Okay, you only need three candles. Once you get a swing low or swing high and you have the proper context and you know what you're looking for, that's it. You go in and you start hunting it. Now watch what happens. We have a swing low form. The very next candle, we have an opening. It trades way down and it comes back up and closes right near the highs. Is that the opposite of this candle? Yeah, but it's got a whole lot of movement below the opening price. So something just took place down here after this swing low was formed. Did this candle or bar go lower than that one? No. I promise I'm going to switch the candles, but I just want to show you from this perspective because this is what we were forced to learn on back in the old days, okay, back in the dinosaur time. So the rallying up on this candle here and closing on the high, that supports this as a swing low because it didn't take out the lower low right here in the middle between this low and this low. This is the lowest low of the three candles or price bars. The next day, we have a big washout from the opening, trading down, and then it closes on the high. So the next day, we're likely to go what? Into this area here. Isn't that a fair value gap? Sure it is. What's the daily bias likely to be? Bullish. So that means it's going to do the opposite of this. It's going to open near the low and then rally and expand higher. Will it close on the high? I don't know. You could, but I don't need to. I only need it to open and start to rally and get up in this area here. That's an opportunity. That's a trade. Does it do it? Yes. But now when we trade up into this area, look what happens. Next day, you might be expecting an open rally, close high. It doesn't give you that. So that could be a day where you missed an opportunity or you took a loss. No problem. Next trading day here, what are we seeing? We're seeing the market retrace back down into this run. How far can it go down? Well, look at your high down to your low. Equilibrium. It's probably going to go below equilibrium to do what? To offer the market a discount. The market does what? It goes down below it, provides a discount. Once it gets there, our mind, we're thinking it's going to be the opposite of this. It's going to be the open near the low and expand higher. That's power three. It's going to be accumulation of longs at the low and then rally higher. We have it right there. It opens near the low, rallies, and closes on the high. The next day, same thing. Opens on the low, rallies, and closes on the high. Now we've gone deeper into this area here, and it's a small little range, but it's still the same function of power 3. Accumulation, which is open near the low, trade down, and then close high on the daily range. Next candle, same thing. Opens, trades down, accumulates longs, trades higher. Same thing here. What's this? It opens, trades down, trades higher. Until we do what? We take out this short-term high. See that? Then we can get a retracement lower or consolidation. We get both. Small lower retracement and consolidation. Next candle, power 3 delivering for accumulation of longs. Next candle, consolidation. Might be a day for the loss. Let's be real. Next candle, what's the bias? What are these over here? They're relative equal highs. There's stops resting above that. That's buy side liquidity. What's it draw?
Okay, so this is extremely powerful. So we're going to stop here. One of my, and I've said this multiple times, one of my main kind of, I'll say, working points has been reading daily bias. Because daily bias is difficult to know where price is going because there's so much liquidity everywhere. So to kind of avoid analysis paralysis, which is where you overanalyze the idea or sentiment of a market, to avoid that analysis paralysis, you kind of have to filter out what's important and not utilize what's unimportant. Not every single area of liquidity is going to be relevant to price. The extremes I'll use to explain my point. If price, let's use this example. Price is here, right? Liquidity up here, 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 and down here is relevant. But liquidity from 1992 is not relevant because it's so far away from where price is at. Because I'm assuming whatever this is, it will be down here because it's a futures he's trading. So I believe that will be all the way down here, right? That liquidity over down here is not relevant to this because it's not close to price. That's just one example of how you can filter out unuseful information, which tends to appear with analysis paralysis. It tends to be stemmed from over-analysis, okay? The paralysis is to do with the analysis. How much analysis is there? Is it all relevant, okay? So my point is this, that what he's just been said anyway is he's utilizing the power of 3 to explain how you can look at and read price action. You can also, you can utilize the power of 3 as well as price action and imbalances and the model itself to then read price, okay? So we're going to, how did you can you voice type it? How did I just do that? Well, there's so much space that's not used here. How do I get rid of this space? Okay. There's this thing where you can wrap the text. Whatever. But let me even see if I'm muted. Okay, thank goodness. Oh my gosh.
Falling up to, we already taken out this high, whole lot of movement below the opening price. So something just took place down here after the swing low was formed. Did this candle or bar go lower than that one? No. I promise I'm going to switch the candles. Yeah, okay, you don't need that. No disrespect to the gentleman, but that's nonsense. You don't need that, okay? You only need 3 candles. Once you get swing low or swing high and you have the proper context and you know what you're looking for, that's it. You go in and you start hunting it. Now watch what happens. We have swing low form. The very next candle, we have an opening. It trades way down and it comes back up and closes right near the high. Is that the opposite of this candle? Yeah, but it's got a whole lot of movement below the opening price. So something just took place down here after the swing low was formed. Did this candle or bar go lower than that one? No. I promise I'm going to switch the candles, but I just want to show you from this perspective because this is what we were forced to learn on back in the old days, okay, back in the dinosaur time. So the rallying up on this candle here and closing the high, that supports this as a swing low because it didn't take out the lower low right here in the middle between this low and this low. This is the lowest low of the 3 candles or price bars. The next day, we have a big washout from the opening, trading down, and then it closes on the high. So the next day, we're likely to go what? Into this area here. Isn't that a fair value gap? Sure it is.
I meant to know.
What's the daily bias likely to be? Bullish. So that means it's going to do the opposite of this. It's going to open near the low and then rally and expand higher. Will it close on the high? I don't know. It could, but I don't need it to. I only need it to open and start to rally and get up in this area here.
Okay, I really want to get this down, so I'm going to go back. I don't feel like I fully have it because my explanation is not clean.
It's probably really close to the low. Not all the time. Sometimes it creates a real fast, sudden continuation. And if you're not expecting it, or if you're offside, it can be bad. But if it's one side, it's really fun to be a part of that. But generally, it's the last portion of the trading day. And it'll create some kind of a low. And then wherever it closes, between that low and where it closes, that's where the distribution cycle is occurring. That part is not that important. The main thing is understanding what does this candle have the highest probability in terms of forming? An open, rally, sell off, and close down on its low? Or is it likely to create an opening, trade lower first, then rally and close near the highs? Let's take the close out, okay? I don't want you thinking that you have to know or be able to predict the closing price. That's more advanced. You don't even need that to be profitable. You just need to know, is this daily range more likely to expand higher or lower than the opening price? That's it. That's all you have to do. That's the key to bias. Now, how do you know what the bias is going to be Most likely. Not everyday bias. Most likely. What's the bias going to be? Well, let's go back to this low over here. It creates a swing low. That means a low with a higher low to the right of it and a higher low to the left of it. So it's 3 candles that make up a swing low. You do not need.
Okay, there we go. We can explain now why it's a swing low. Because the candle to the left of it and to the right are both, or have both, or both have, sorry, English, a higher low formed.
Need a Williams fractal. That's way too many candles and you've missed a move. Okay, you don't need that. No disrespect to the gentleman, but that's nonsense. You don't need that. Okay, you only need 3 candles. Once you get a swing low or swing high and you have the proper context and you know what you're looking for, that's it. You go in and you start hunting it. Now watch what happens. We have a swing low form. The very next candle, we have an opening. It trades way down and then comes back up and closes right near the highs. Is that the opposite of this candle? Yeah, but it's got a whole lot of movement below the opening price. So something just took place down here after this swing low was formed. Did this candle or bar go lower than that one? No. I promise I'm going to switch the candles, but I just want to show you from this perspective because this is what we were forced to learn on back in the old days, okay, back in the dinosaur time. So the rallying up on this candle here and closing on the high, that supports this as a swing low because it didn't take out the lower low right here in the middle. Between this low and this low, this is the lowest low of the 3 candles or price bars. The next day, we have a big washout from the opening, trading down, and then it closes on the high. So the next day, we're likely to go what? Into this area here. Isn't that a fair value gap? Sure it is. What's the daily bias likely to be? Bullish. So that means it's going to do the opposite of this. It's going to open near the low and then rally and expand higher. Will it close on the high? I don't know. It could. But I don't need it to. I only need it to open and start to rally and get up in this area here. That's an opportunity. That's a trade. Does it do it? Yes. But now when we trade it up into this area, look what happens. Next day, you might be expecting an open rally, close high. It doesn't give you that. So that could be a day where you missed an opportunity or you took a loss. No problem. Next trading day here, what are we seeing? We're seeing the market retrace back down into this run. How far can it go down? Well, look at your high down to your low. Equilibrium, it's probably going to go below equilibrium to do what? To offer the market a discount. The market does what? It goes down below it, provides a discount. Once it gets there, our mind, we're thinking it's going to be the opposite of this. It's going to be the open near the low and expand higher. That's power 3. It's going to be accumulation of longs at the low and then rally higher. We have it right there. It opens near the low, rallies, and closes on the high. The next day, same thing. Opens on the low, rallies, and closes on the high. Now we've gone deeper into this area here and in a small little range, but it's still the same function of power 3. Accumulation, which is open near the low, trade down, and then close high on the daily range. Next candle, same thing. It opens, trades down, accumulates longs, trades higher. Same thing here. What's this? It opens, trades down, trades higher. Until we do what? We take out this short-term high. See that? Then we can get a retracement lower or consolidation. We get both. Small little retracement and consolidation. Next candle, power 3 delivering for accumulation of longs. Next candle, consolidation. Might be a day you took a loss. Let's be real. Next candle, what's the bias? What are these over here? They're relative equal highs. There's stops resting above that. That's buy side liquidity. What's it drawing up to? We've already taken out this high. What's going to go up here likely, right? Because we've already taken out sell stops above here with this drop. And we keep proving it's going higher. So where's it likely to go? Above here. So until we get to that point, we keep thinking the opposite of what we're showing here. An open near the low and close on the high. Power 3, accumulation of longs. Distribution of longs at the close. The next day, indecisive candle. Okay, no big deal. Next candle, we open, trade down. Same thing. We're looking for buys. The whole time we're looking for buys in here. You might get stopped out. You might have a losing trade, but you're not abandoning the bullish bias until we get above these highs. Then we have to study it. Does it want to run higher? Once it clears these highs, does it keep showing it want to go? The whole time we're looking for buys in here. You might get stopped out. You might have a losing trade, but you're not abandoning the bullish bias until we get above these highs. Then we have to study it. Does it want to run higher? Once it clears these highs, does it keep showing it want to go higher? Well, we got a nice run here, next candle here, nice run here, small little indecisive candle there, but then we go back in the same cycle again. It's expanding, it's accelerating higher. Each day we're looking for longs. Opening near low, trades below the opening a little bit, and then rallies and closes near the high. That's bias. That's sticking to your bias. And the same thing is done over here on the opposite. We have imbalance here. And I promise after this, I'll change the candlesticks. Your eyes are probably going nuts right now. Fair value gap, we trade up into it. So once we trade into it, what are we expecting the market to do? What? Trade back lower. So if we're trading back lower, we're going to be looking for this pattern. Open, rally, accumulation of shorts, distribution at the lows. What are they distributing? The short positions they've accumulated above or at the opening price. So in this candle we have to open, it rallies up to go short, and then trades down, closes on the low. Just like this here. See that? The next candle, you're expecting the same thing. Does it deliver that? No. You might take a loss that day too. Okay, no big deal. It's likely to go where? Here's where the sell side is now. Each candle, open, rally, close down on the low. Open, rally, close down on the low. Open way back into this one, and it still closes lower than the open, but still nice range down. Same thing here. Opens, rallies, sells off. Next candle opens, sells off. Then comes back and overlaps it, and now we have a potential key reversal. Then we have back and forth price action where you can probably get beat up.
Okay. Hello. Nice. And not today.
Open way back into this one, and then still closes lower than the open, but still nice range down. Same thing here. Opens, rallies, sells off. Next candle opens, sells off. Then comes back and overlaps it, and now we have a potential key reversal. Then we have back and forth price action where you can probably get beat up. Imbalance, it trades up into that. And then we go into that area where we're at now. So let's go to a candlestick, and it's a lot easier to see it this way. But this function of power 3 is how I teach the bias, and I also teach how to submit to the daily range. You have to learn how to hold to the close. If you're going to just day trade and you're not really participating in the sustained moves that's made available in these daily ranges, like today, I mean, look at this move here. That's nice. Many of you probably took shorts. Maybe some of you took longs. I got some people putting comments in the previous video saying, you know, I saw a fair value gap at this price at this time for a bullish. It's not bullish. We're not buying. Our bias is not bullish. It's bearish. It's already traded to the top end of that fair value gap, and it's likely to go lower now, taking out this sell side and attacking the sell side over here. Okay. Okay. All right. Let's drop down to an hourly chart. And that fair value gap, the high and the low levels, that's what's being shown here, right there. And these annotations are obviously from what you saw on the episode 9. So watch what happens. The market trades down, finds some support at the low end of the fair value gap, then rallies back up to the high end of the fair value gap, and then breaks right before midnight on the 17th. And then we consolidate, trade back up into what? What is this? What's this right here?
Fair value gap, mate.
It's a fair value gap.
Yes, sir.
Price goes up, rebalances that there, and it's doing it. What time of day?
I don't know. 5:30.
Not New York. It's overnight. European London session. That's just how you can use that model. The same model. You can use it in an Asian session. Using it in an Asian session, you ain't gonna get a lot of movement because it's typically not a lot of movement in that time of day. But you can trade it in London close. You can trade it in, obviously, the New York Open, like I'm teaching you, and London Open. London Open, if you know what you're doing with the daily bias, you can catch enormous moves. Enormous moves. But sometimes you're going to have to weigh out a lot of give and take back and forth. It's kind of like today, where the market rebalanced here and then consolidated and waited for a little bit of a push higher. Then the news came out. Okay, so I'm kind of hopefully clear that up for you now. All right, 15-minute time frame. I'm taking a look at this imbalance here. We rode up into that, rebalancing all this movement down. Remember that paint roller analogy I gave you? The paint was applied to the wall going down, but if all this movement was given to that one single candle, there's going to be little porous places in prices between the high and the low where the market wasn't efficiently offered for buyers. There wasn't much time and back and forth pricing to give buyers an opportunity to get in there and participate. So an efficient market, we'll see the market go back up and reprice that. So it's down and then right back up, like paint being applied to a roller on a wall. You want to make sure you go back and forth to deposit the paint evenly. So there's an even distribution. So again, the background of this chart, that's the wall. And every one of these candles is a paint roller. And whenever you see these big, long, drawn-out candles, there's a strong tendency, not all the time, but there's a strong tendency for the price to go right back up and overlap over that entire range. Same thing over here. We have the market drop down, creates a fair value gap here. Doesn't it take?
Okay.
Take out some lows over here? Yes. There's displacement. And then you can have an order to get in short here. But then watch what happens. This little pump up. That might be scary. It could have stopped you out if it went higher. That's the risk in this, folks. I'm not going to give you a silver bullet that removes losing trades. I lose trades too. You're going to miss moves. I miss moves. Okay. You're going to read it wrong. I read it wrong sometimes. Okay. I'm not perfect, but I'm giving you tools and processes to help you determine where the most likely scenario is going to be. And then you just work those statistical odds, and hopefully with sound money management, which I'll cover, which will hopefully get you to the winner's circle more often than not. All right, so we have the morning session starting before 8:30. We have a rally up and then it breaks lower. In this area here, we're going to drop down to a lower time frame. But before I do, I want to give you a little bit more details. Think about what I've taught you so far in this teaching for Power 3. The accumulation, manipulation, and distribution cycle of the daily range. If we are trading near the high end of that fair value gap on the daily chart, that's what that level is, okay? When we just drop down to a lower time frame chart. So with this 15-minute time frame chart, and I apologize, the chart's a little bit shifted. It's still the same chart. I just added the annotations. The idea is we're expecting this Power 3 formation where it's open, rally, create the high of the day, sell off, and close near the low. That's what we're looking for. Why would that bias be expected on this day? Because we worked the upper end of that fair value gap on the daily chart. Then we had multiple shifts in market structure bearishly, when we already have a bearish bias on the daily chart anyway. So it gives you a high probability that this day is going to be a down close day. It may not close on the low. It might just be a big down move, and that's all you need. You just need movement. So this level here, it's dashed. That's the midnight New York opening price.
Okay, so I'm going to summarize that a little bit. Sorry, I was up and down multitasking. It's already like 4:30, which is basically the time I start getting ready to start leaving. Unfortunately, we did have like a lot of technical difficulties in this trading video, but it's fine. We'll complete this today, no matter what. It may just be I listen to it on the train or something like this. Actually, to be fair, I don't know, but we'll definitely be finished by tomorrow. The difference is I may not do it on stream. I may do it off stream, make my own notes, and then I'll summarize and go through it myself with you guys on stream. So that's just dependent on whether or not I'm able to finish things in time or what time I come back from church, because I finish around 8:30. It's about an hour and a half journey back home, 10 o'clock, and it's gonna be late, and I may have to go back to my mum's house first. So yeah, there's a lot, but nevertheless, we're here. Excuse me. I think I'm making food right now, so I'll probably. I'll probably stream for maybe another like 10 minutes. But let me just summarize this real quickly. So the information I heard was essentially him talking about the purpose of the strategy. One of the things of the strategy is that you're not going to win every single trade, right? Nobody has that. However, you're going to win more times than you will lose. And I've been to a hedge fund, one of my school trips in school when we went to economics, well, my economics lesson. We went to London, went to a hedge fund. I think one of our economics teacher had the contacts and he utilized that to show us the opportunity to go, and it was very, 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 very good, and I really enjoyed it, and I'm super grateful for that. And in that day, we spoke to the excuse me, the people that own the hedge funds. They had money, right? And one of the things they also had was they had this table full of food, like it's like a buffet basically. You go throughout the day, you just pick what you want to eat. They're in shorts, obviously it's London, they're in the office, but it was summertime anyway. They're casual, they're very cool people, and they answered our questions. They allowed us to ask questions, and they answered it to the best of their ability. And one of the things they showed us was the model of their trading style. And hedge funds are interesting because they have very small edges. Remember, it's called a hedge fund, but within hedge is edge, right? And their edges are very small. Like you'll realize that they don't have like these things where it's like their win rate is like 1,000, 100% every other month. Like they can go on a streak for like 25,000 trades and they win all of them or most of them or something like this. They lose almost just as much as they win, but the concept behind them is that they mitigate their losses and they capitalize on their buys or their wins. And obviously, I was quite young at the time, little understanding compared to what I have now. So I wasn't really able to really absorb a lot of the information to do with their model. So unfortunately, I cannot replicate what they do, nor can I do research based on what I know because it's such a small knowledge gap in my mental memory in terms of that specific day towards their model itself. But I at least understood the concept, and that concept is interesting because when we trade as a retail trader or whatever you want to label a normal average person that enters the market, we have a lack of information. No matter which way you look at it, we don't see orders, we don't see volume, we don't have access to brokers. The average retail trader doesn't. We don't have all these types of tools that people have, which give them extra information. We don't have a news outlet that gives us the news as soon as it's released. We have delayed information, such as Forex Factory, which is what I use. So there's a lot of things we have that's available to us, but a lot of things that we don't have. There's almost more that we don't have than we do have. So we have to really base our analysis, our statistical guesses and statistical bets on small edges and footprints of the ones that should have information. In other words, 1 second, I have an overflow of right. Sorry, 1 second. Oh, let's go to food. Forgive me for the stream, boys and girls. I apologize. It's not to the standard I would have liked it to be. A lot of distractions, a lot of noise, a lot of just so much. But I did say I'll be here every day, no matter what. And these are sometimes the raw footage of raw behind the scenes, what's really going on. So apologies on that front. I think I'm gonna do this off stream and then just tell you guys how far I get and summarize to you instead, because especially with these longer episodes, it does require focus. So I want to find space where a cleaner area of space where I'm more focused to complete the episodes. So yeah. Thank you guys for watching. I will make sure there's no issues for next stream to the best of my ability. I'm gonna leave soon, with like an hour to be fair, so I'll probably do this off stream and get back to you guys. I can't wait to get back on my normal setup. I don't like this laptop thing, but we're here. So shout out to you guys for watching it. Check all the links in the description. My social medias, my website's all there, and I'll see you guys tomorrow for day 48 or 9. It's been with CJ at sea.